Everyone, welcome to this channel which is MentorShobhit, and I'm Shobhit. I have a mission to help you become one of the best mutual fund advisors in India. And in case you have not still subscribed to my channel, do hit the subscribe button, hit the bell icon so that you can get new latest updates regarding anything and everything which has to do with the mutual fund distribution business. So today I'm going to discuss with you as how you can prepare for your NSM 5 exam, which is the certification which you are going to require to qualify to become a mutual fund distributor. So today I'm going to take one of the topic, which is what are the various kinds of mutual fund schemes in India. And I'm going to share some of the tricks, and those who are going to stay till the last, I'm going to share a free resource which I have created to help you in preparing for the exam. So I hope you guys are excited as I am to discuss with you the various kinds of mutual fund schemes which will help you in preparing for the NISM 5A exam, but more importantly will help you in making a better mutual fund distributor. So the first kind of mutual fund is a type which we can discuss today is open-ended fund, closed-ended funds, and interval funds. Now, what are these open-ended funds? Any mutual fund scheme which an investor can buy and sell or any working day is called open-ended funds. Whenever you want to buy, you can buy. Whenever you want to sell, you can sell. And these kinds of schemes are called open-ended funds. So I hope you got the idea as what are open-ended funds. And then coming back to what is closed-ended funds. Closed-ended funds are those schemes which you can buy only when it has been launched by the mutual fund companies, which is called new fund offer. Later on, whenever you want to buy this kind of scheme, you can buy only on stock exchanges, because all closed-ended funds are now compulsorily has to be listed on stock exchanges to provide the regular liquidity. So you need to be clear on this. Closed-ended funds are those funds which are going to be bought and sold on stock exchanges after the initial launch, which is called new fund offer. And company is going to buy back the units of closed-ended fund only at maturity. Now, what are these interval funds? Interval funds are those funds which will give you a window of opportunity to either buy and sell at a pre-specified dates. So every day interval, you will have an opportunity either to exit or enter the scheme. Now, these kinds of schemes are very not normal in a sense that now they are not coming into the market, but we should have some idea. So these are the three types of schemes from the operational point of view. Now let's talk about the management point of view. So once we are talking about the management point of view, what two kinds of segregation which we can make on all the mutual fund schemes. First is actively managed fund and other is passive funds. Now, actively managed funds are those funds where a fund manager take an active call to buy a stock in the portfolio or to sell a stock in the portfolio. So the portfolio will be built according to the investment objective of the scheme as well as the judgment of the fund manager and the fund management team. So these are the funds which will have or which are perceived to generate better return than the market, because the fund manager is going to take an active call. Since there is an active involvement of the fund managers, the expense ratio or the management fees to manage that funds are higher compared to the passive funds. So what are the passive funds now? Passive funds are those funds which are going to be having a passive strategy. It means it is going to follow a predetermined portfolio which are already available in the market or a benchmark. So let's assume say a Nifty index fund or Sensex fund. So these are the funds where the portfolio will be in line with the portfolio of the Nifty. So if Nifty has a 50 stock, these portfolios will also have a 50 stocks and in the same weightage, in the same proportion as it is in the index. So if the Reliance is having say 6% weightage in the index, then the portfolio will also have the same 6% weightage in the portfolio or in the index fund. So this we need to be clear, and as I told you, since the fund manager don't take an active call to pick a stock, then these funds will have a lower expense ratio. Now let's come to the most important thing, which are what are these equity funds, debt funds, hybrid funds, and other schemes. Now, these are the most common language or the nomenclatures which you will be listening every now and then. So what are the equity funds? As the name suggests, the majority of the money should be invested in the stocks. The definition which is given by the regulator is on average 65% of the money should be invested in stocks at any point of time. So if the money which is there in the fund, if the average investment in equity is less than 65%, then it will not qualify as an equity fund. If it is not qualified as equity fund, it will be having a different kind of a taxation. Now, coming back to debt funds are those funds which are going to be investing majority of their money into debt instruments. So debt instruments, and again the definition is 65% and above on average should be invested in the debt securities. Now, what is hybrid funds? A name suggests itself that it should have a multiple asset classes, but most of the hybrid funds will be a mix of equity and debt. So it may be aggressive hybrid fund where equity will be more, or balanced hybrid fund where we'll have same proportion of equity and debt, or a conservative hybrid fund where you will have less equity and more debt. There are other hybrid funds which is say multi-asset funds where you will have not only equity and debt, but you will have other asset class as well. So these are the some of the funds. The other schemes are those schemes which will have different kind of flavor, in a sense that if a scheme is investing in foreign assets or foreign equities, then those can be called as other schemes. Now, if in case you like the content till now and you want to become a new age mutual fund distributor, if you want to be a successful mutual fund distributor, then I would love you to join my 90 minutes free masterclass, where I'm going to show you how you can start your mutual fund distribution journey in 21 days or less. So in case you want to change the way India invests, as we are determined to help people, then you should join the 90 minutes free masterclass. The link of the masterclass is in the description. Do join me there. Now let's come to the fourth one, which is solution oriented scheme. Now what this is, solution oriented scheme, these are the schemes which will have some specific goals in mind, say retirement or your kids education. So the distinction of these schemes are these schemes will have compulsorily 5 years of locking. So investors, those who are investing in these kinds of scheme, they will not be able to withdraw money before 5 years of investment period. So these are the specific schemes with the specific goals, and this will help customer to detach their emotions from the investment goal, and that's where you are going to get a better return. Now, the last kind of scheme which I would like to discuss with you is real estate mutual funds or real estate investment trust. So what are the real estate investment funds, mutual fund schemes? These are the schemes where the fund manager create a portfolio which will be mix of physical real estate as well as stocks which are related to real estate. So this kind of mutual fund schemes are not so popular now. There was a one period of time where some mutual fund houses were having, but these are the definition of real estate mutual funds. And REITs are the trust where the builders or those who are having a big commercial properties, they are going to club those properties in a trust, and then they are going to issue units against those assets which our investor can buy, and the income generated by those real estate or commercial properties will be distributed among the unit holders. So I hope you got some clarity as what these different kinds of mutual fund schemes are there in the market. If you are an investor or if you are a mutual fund distributor or if you are an aspiring mutual fund distributor, these all things are going to give you some clarity, and I hope you got some insight. That's how you should be planning or how you should be approaching your mutual fund investments or for your customer. Now, please remember these are the basic definitions as how the mutual fund schemes are segregated by the nature or by the investment horizons and so on and so forth. But as you might be knowing, SEBI has given a clear-cut guidelines as how many schemes you can have in per every category and on the every portfolio basis. So if you want to dive into details of on this, if you want to know more about the nitty-gritties, the insights of mutual fund industry, and you want to start your mutual fund distribution business, then do be in touch with our community. In case you have not subscribed, do subscribe, do share your comment below in case you find this content useful. And as I said, if you really want to help your customer meet their financial goals, then I would love you to join our community so that you can become one of the best mutual fund distributor in the market. Thanks for watching. I hope you got some insights. And as I promised, I am going to give you a free resource. So in case you are preparing for an SM5A exam, in case you want to become a mutual fund distributor, then I am going to give you a free 100-question mock test paper for you. So in case you are preparing for an SM5A exam or you want to prepare and you want to see how much you know, how much you don't know, then do give that test. It is totally free. The link is in the description. I would like you to test your knowledge as how much you know and how much you have to work on. So just give that paper. It is an online paper. If immediately you are going to get result and it is not going to cost you anything. So prepare well, wishing you all the best for your endeavor in case you are looking to give that exam and in case you want to start your mutual fund distribution journey on a high note, then do join my 90 minutes free masterclass. Thank you everyone. I had a wonderful time discussing with you all these insights. I hope you got some clarity. In case you like the content, do hit the subscribe button, give your perspective and insights so that Google and YouTube can know that we are sharing some quality stuff. Thank you very much, guys.